Welcome everybody. This is Mike Motherwell for Traders Hideout. We're going to get started in just a minute. Let some people get here from YouTube and Twitter, Google Plus, so on and so forth. Okay, I've been asked for a long time to do this video series, and it took me a while to gather all the information and to make sure that I'm very careful on how I present the information, um, as well as the way that I will deliver the information. This is probably by far the most um, revealing look at the Forex industry you will probably ever hear. A little bit of a background about me. I've been trading since 1988, and for Forex, in the Forex, I've been for over 10 years actually. And I also do a lot of consulting for brokers, some very large brokerage firms, so I understand how things work on the inside. This industry is simply put, um, again, I'm very careful on how I say things. They're simply hungry for money. That's a nice way of saying it. They're very hungry for money. The rest you could figure out for yourself. What I'm about to share with you in this 5-part series is how the Forex industry actually works, the internals of it, some of the thinking behind brokerages and platforms, and actually how the traders uh, contribute to this fiasco. Um, so this 5-part series is going to be every time I'm going to drip another part. I'm pretty sure this is going to be a very controversial video, especially from brokers and platforms. But I think that the word needs to be out there for the average trader. Um, so not only am I a trader, obviously the platform that I created here for myself and I'm sharing with people that you can download for absolutely free is because I was sick and tired of the games that brokers played and the platforms that's out there. So we're going to cover the games that the brokers play, the actual platforms that guarantee your losses pretty much in most cases, um, the issues that trader never learns and why over 80% of traders lose money, the wrong tools for success, signals, robots, technical analysis, so on and so forth. We'll touch on those. There's going to be other videos on technical analysis and things like that. I will probably touch a little bit on it today, and how you can actually make money with forex. So obviously, I've been doing this for a while. That's all I do, aside from writing my own software and the platform. So obviously, there's money to be made, but you just need to know how, what, where, and who, right? So those are the most important parts. Otherwise, you just won't have that ability. To say it in short, the traders in forex and the stock market are on the short end of the stick. So we need to make sure that you first understand what the issues are, what the problems are, and then we can address them and see what could be done to make things go your way. And I will show you things in this platform that sort of are non-standard and are overlooked by a lot of traders, or they may not see the actual reasoning behind it. There's a lot of logic that goes into the forex industry. There is strategists, there is money gurus, and like I said, it's a very money hungry industry. So they will try to take your money in a nice way. So today we're going to look at the games that the brokers play and how it affects you. Okay, so let's get started. Well, today we're going to talk about the games that the brokers play, part one. Um, First, we're going to talk about the social trap. There's a big thing going on in the past 2 years, 3 years even, uh, that with the buzzwords of social trading. So you'll see a whole bunch of trades that people make, supposedly, and that's what they're trading. So you can copy them, you can follow them, you can talk to them, you can chat with them, you could friend them, whatever. We're going to talk about this trap. Okay, and notice it's in capitals. We're going to talk about hedging and cancellation of orders and how brokers make money over 80% of the time on your money. We're going to talk about rate change delays. We're going to talk about execution delays, usually on the exits and not on the entry. And we're going to talk about the trap of amazing low spreads and what you really pay is more. We're going to talk about demo mode versus real trading and bad order entry screens, lack of options, and protective defaults. So we're going to talk about um, all this information. This is, again, by far probably the most revealing video series you're going to see on the forex industry anywhere. Most people either they're inside and they won't talk about it, or most people just don't know. Okay, so let's uh, let's talk about the social trap. Social trap. We're gonna start by I'm gonna I'm gonna take the large brokers into this picture. We'll bring them in. Bloggers are usually employees or bloggers from the outside or people that are getting paid to converse in chats with carefully crafted texts. Okay, so they have scripts, they have a certain framework that they work with. Now, brokers make money on the trades that you make because it's based on spreads, right? So obviously, they want to make sure that you create more trades. So also times also at times it offsets their losing in-house trades, and we're going to talk about some of the ways that the brokers work with the money. Okay, so what happens is you normally deposit a bunch of money into your trading account. Okay, and it's sitting in the broker's account, so they have a pool of money. Okay, now they also get a whole slew of trades from the traders and they need to manage them. So we'll take a look at how they manage that. So trades are offset by in-house hedging and cancellations. We'll discuss that in a bit. The more trade volume, the more likely the in-house hedging applies. So that means that if they have 100 users versus 50,000 users, chances are they have more hedging that goes on in-house because chances are more people are trading any particular symbol or currency pairs. Okay, promote trading competitions on real accounts with prizes, and most of the time it's to fake users or users who are actually employees or um, those bloggers. Okay, usually the prize winners turn out to be automated fake accounts or employees. And how do we know that? Is because if you follow them, you will notice they will never ever respond, or the way that their trades are made are inconsistent with what a trader would do. For example, if somebody trades the euro dollar all the time and that's all they do, in competitions, all of a sudden you're going to see them trading kiwis, yens, and things like that. When they have never done that, you can see inconsistency. That is not what the trader does. So there's all these red flags that you can read between the lines and see what's going on. Those bloggers and employees, they promote following users who have no clue how to trade. Um, or they've had a great run for a week or a few days or whatever. But knowing how to trade is not just getting the wins. Most people say, "Oh, this guy made 200%." The numbers are actually skewed, and this is the other thing. The performance numbers are intentionally misrepresented. The win-lose ratios. Sometimes the deposits are counted as profits. For example, if there's a competition and you start with $1,000 and say that you lost 50% of that during the competition, but then you deposit another $1,000, you're actually with 50% um, profit. That's just how it's counted, and it's wrong. It's completely wrong. So you need to take a look at that, because what happens is they take a look at the account at the beginning of the the competition, and what's the balance at the end of the competition, but they forgot to take out all the deposits. So that part sometimes gets in. Um, Also, the profit loss is gross without the spreads and the carryover charges for the weekends. So the numbers are skewed. So this brings a, this brings up an interesting issue. Have you ever noticed that most chats are filled with garbage and useless information? You can just hear all the blunder. Oh, look, this is going up, this is going down, and things that just don't make sense. There's just too much noise. In-chat signals have no backings and no setup for information, and I'll discuss this later. But uh, basically, what is, oh, I got in. Well, what's your exit? I don't have one. I just bought it. Okay, that is not a signal. A signal should have take profit, stop loss, fall back. Um, it should have all these exit points, checkpoints, pivots. That's a true signal. Okay, most of the signals out there on the web are complete garbage. Okay, most of the time you don't even know the time frame of the signal. We'll talk about those. That's a separate it's a separate video, but we do talk about signal carriers where they have a big part in this industry. Most of them will give you a signal that you don't know whether it's a swing trade or maybe it's a scalp. You just don't know. They won't tell you the targets on most of the time. Hedging and cancellations of orders, how the brokers actually make money over 80% of the time. Now, this is really interesting, because if you understand this issue, if you understand how this industry works, you'll understand why I really got pissed off at this whole industry, and I created my own platform. It's these next few uh, sections that we're going to talk about. The cancellation or internal hedge. Now, brokers make money every time you trade, even if it's done by the broker level. So, for example, if one trader buys and the other sells, both orders are filled in-house. So if you buy 1,000 units of euro dollars and I sell 1,000 units of euro dollars, well, nothing ever happens, because both trades canceled in-house, okay, or they hedged in-house. So they got the spreads from both trades at the same time. That's pretty important stuff. So as long as the risk is low, the orders are kept in-house and are never passed to the banks for the actual clearing. Now, the broker will wait until the opposite order is placed the other way most of the time. So that means, say for example, you bought 1,000 units of euro dollars, okay, but I haven't sold mine yet. They will wait because, and again, the more users they have, the more traders that they have, the longer they can wait. But chances are they won't wait that long. So if a big broker has some of the big brokers have 100 or 150,000 traders. So chances are things are going to get filled fairly quickly. So even if somebody has a big order, chances are it's going to get canceled in-house because someone is going to create an order the other way. Now, once it goes beyond certain levels, then the brokers will have to go to the banks and create those orders. Now, the opposite trade hedge, think of it this way. If a broker thinks the rate will go the other direction, a hedge trade will be made. So not only will you lose money, they will actually, their trade will win. So the broker places an actual trade against yours, winning twice. Why is it twice? Because on their trade, they will make money, and on your trade, it was never passed to the bank. So they made the complete amount. So your trade lost, so the broker keeps the money plus their winning trade. Okay. Now, hedging, external hedge, what does that mean? If the trade went to the bank and it's losing money, well, what happens then? The broker places an actual trade against yours to further the losses. Okay? Any further losses to yours, they'll start making money, and then they close their trade. Okay? So basically what happens is, say that you bought 1,000 units of euro dollars, okay, and they passed it to the bank for some reason, and it gets to a certain level, where it needs to retrace, but you're already so far down, the chances are it's going to close. It's going to be close to close. They'll start a hedge against your trade, and so they will make money when it comes back. Okay, that's the actual external hedge, where they hedge it against on the bank level. So they'll actually put two orders out, one yours and one of theirs. Okay, rate change delays. Now this is really important stuff. Okay, most brokers delay quotes. Here's how they safeguard it and what you should know. Look in the terms of service. If you see any of these, chances are that the quotes may get delayed. No arbitrage allowed. Okay, arbitrage trading is the difference between two separate platforms. So for example, if you were to take the traders out at platform, okay, let's bring this up right now, and we'll take that as an example. Okay, if we were to take a look right now at the euro dollar, we're 1.25095. Okay, let's say 1.2509. Okay, and all of a sudden there's a big jump. Now the other brokers may not bring the new rate as fast as you would see here. Okay, now what that would mean is that since you see things going up on this end, you would actually create a buy at the other broker. Okay, and that is arbitrage. Okay, and it goes the other way. You can sell it. Okay, so if they tell you no arbitrage allowed, no scalping allowed, obviously you're going to be doing the same thing, right? And no hedging. Okay, meaning that on one of them you're actually going to buy and the other one you're going to sell, and then you're going to make money possibly on two platforms. Okay, aside from U.S. citizens, which are not allowed to hedge anyways due to the NFA, the National Futures Association, most platforms will not allow you to hedge. Most platforms will not allow U.S. traders anyways. Only some of the big brokers have U.S. citizens, U.S. traders allowed. Okay, because the software is very limited in terms of the NFA regulations. The Traders Hideout platform is NFA. It does take all the NFA regulations into account. You cannot hedge. You cannot do multi multi-exits if you are US traders. So all those things are taken into account. But that is one way that you can know if the quotes are delayed. If you see that there's no arbitrage or no scalping allowed, then chances are they're doing delays. And if you try to do scalping, they will actually just cancel that trade, or they might even freeze your account. Okay, so if you violate the terms of service, okay, your winning trades will usually get canceled, almost always, and the account is paused for review, and all the open trades can be controlled, which is really bad. Okay, that is a big thing because you might have actually winning trades that you might want to close, but you can't because your account is paused or frozen. So that's a big thing that you're going to be losing more than what you bargained for. So check your broker. If you're not using the Traders Hideout platform, here's how you check it. During the high volatility, so for example, on oil and gold and silver, and even on the Eurodollar when there's a big move, okay, simply look at the difference between the rate of change, the delta. So if the broker's rates are lagging the THP rates, the broker is manipulating the rates. That's the bottom line. Okay. Now, one thing to remember, during the high volatility, for example, if there's a news release or something happened, like a big tsunami or something, delays are 15 seconds is already high, but 5 to 10 seconds, it's okay, it's normal, but not more. Okay, 15 is actually pushing it. Some brokers, you might even see it 30 seconds until it catches on. So that's when you know that they do all the delays, and it generally means that they're doing the order cancellations, which we talked about. They're actually doing the hedging and the cancellations that we talked about on here. Okay, so that's something you should watch out for if you're not using the Traders Hideout platform. Number 4, execution delays. Now it's usually on exits. So here's how it works. If you place your entry and exit, the brokers will play the pips game. What happens is the broker waits for the rate change, whether the spread will be higher than the actually that's quoted, okay? And this is normally done on the exits, so you will notice that the exits will take longer. Okay, now obviously it does make sense that exits and entries will take the same time. Okay, now from a computing standpoint, okay, I should know because I got third degree in computer science. I got my PhD in computer science. So from a computing standpoint, it takes nearly the same time to open and close a trade. Okay, but most platforms, what you will see is that it will take longer to exit than it would to enter. Okay, so that is generally when you know that a broker is playing the pip game, trying to squeeze out another pip when you exit. Okay, and we'll see that in a second when we talk about another game that they play, which is right here, the trap of amazing low spreads. What you really pay is more. Okay, you might see sometimes brokers show 0.1 to 0.9 pips for currency trade. For example, on the euro dollar, you're going to see, oh, we have an average of 0.2 or 0.5 pips. Well, that's complete hogwash. It's impossible. Here's why. Most exchanging banks will charge at least 1 to 1.5 pips for euro dollar. I can tell you that some of the leading brokers that have huge volumes, okay, they get at 1.2 pips. Okay, and I'm talking massive brokers. It's probably the first or second largest broker in the world in terms of volume. So they got some of the best rates from the banks. And if you see something like this, this means that they're doing everything that we've talked about until now. They're doing the cancellation, they're doing the internal hedging, the external hedging, all the games, they're doing those. So stay away from those kind of brokers, okay? Really important. It's a sign that a broker plays with the extra pips also on the entries and on the exits. Now, the execution rates are not the same as the quoted entry or exit rates. Now, it's also a sign that the broker does the inside pooling, in-house pooling, or trade cancellations that we talked about. The trades, well, they're fake, okay? And they're not really, your trade is not trading for real. So Basically, the broker cancels the trade with an opposite self trade if they need to, or they ensure that the trade is against an existing opposite order or trade that's open, or they will only open it if it's losing more than the triggered loss level. That's something that we didn't talk about before, but let's say you buy 1,000 units of euro dollar, and you you were supposed to be, let's say you set up your stop loss of 100 pips, take profit of 200 pips, and it's now at 50 pips towards the stop loss. So it's losing 50 pips. Well, that will trigger at the broker level, at whatever rate they decide, it will trigger an actual order where they will open up an order for the difference between the 50 pips and the 100 pips. Okay, and it's all computerized systems. Everything there is computerized. There's usually a few people in there. There are a few traders that watch the actual pooling, so they know what they need to do. Um, Again, it's a pretty smart industry. There's a lot of money in it. Brokers will only open trades based on the pool trader's requirements. What does that mean? Say, for example, overall, there is 5 million units of euro dollar on the buy and 7 million units on the sell. So the brokers will only open up the 2 million units difference, basically. And that's how they take both ends. So when you think about it, they had 7 and 5, so they get 7 plus the 5 is 14, but in actuality, they're only paying spreads to their banks on 2. That's pretty good. That's pretty good ROI. Okay. Now, something to remember. If the broker routes orders directly to the banks, okay, and again, I'm talking about the brokers that have really, really low spreads, like zero point 0.1 and zero point 0.9 pips or something, that's just impossible. And if they do route their orders directly to the banks, okay, they will be bankrupt very fast. Okay, I'm not mentioning any names of any brokers, but I can tell you some of the largest brokers on earth, they claim that they do not send any, they all their orders are directly sent to the banks. They would never ever do anything for the euro dollar below the 1.5 or the 1.2 pips, because they would simply lose money if their cost is 1.2 pips. So they'd be bankrupt really fast. Okay. Well, demo mode versus real trading mode. Well, most platforms are broker driven, so the demo mode is made different. With most brokers, the demo mode trades are rerouted to different servers or different software, okay, like a different program that handles that sort of order. Well, demo mode does not depict real mode. Okay, how can I prove this? Well, it's very simple. If you create, it'd be good if I could spell. If you create a market order, MKT stands for market order. Okay, most platforms will execute at shown rate. So for example, let's show this right now. Okay, don't forget the rate changes all the time. If you were to do at market, it means that it should get filled at whatever the market is, not necessarily what is quoted. So right now it's 25123. If you were on demo mode, most of the time you will be paying this. Okay, the Traders Hideout platform is not like that. Everything is routed through the same server, so you would actually get the market fill. Okay, it's a true demo. Um, and demo trades allow for things that are not allowed with real accounts. So, for example, like we talked about the arbitrage, the hedging, the scalping, and the tick trading. Um, Most platforms will not allow that, or they'll freeze your account and they'll just cancel any of the profits that you've made. Obviously, whatever you lost, chances are you won't lose if you're doing the arbitrage and the hedging and you know what you're doing, and the scalping on all those delays. Okay, but if you have any losses, they'll keep those losses. But if you had gains, they're going to keep those too. So remember that. And I don't know if you ever noticed, but if you used any other platforms, if you notice that there's never any issues in demos and it's always just in real trading, okay, you should have the same issues in demo as you do with the trading. So for example, if there was an issue with the closing rate, um, it should be both in the real trading and the demo trading. In demo trading, most of the places, you'll never have any issues. So something that we've noticed um, when I put out the platform initially, there was a small bug, which obviously is fixed. There was a small bug that sometimes was triggered after a, a, a trade went into take profit, but it didn't reach the chaser. If you don't know what the chaser is, have a look at the video. There was a small bug. It was actually for the benefit of the trader, but um, it was still a bug, and the bug was noticeable both in the demo and in real trading on two separate accounts. Okay, so that is a sign of a platform or a broker that uses a platform that treats everything the same. Okay, now Traders Hideout is not a broker. We route it to brokers. Okay, but it's routed the same way. So whatever it is that you get quoted, whatever issues there are in real mode as opposed to demo mode, they're the same thing. Okay, that is something very important. If you're trying demo out for any broker platforms out there, then you should really watch out for this. Okay, number 7. This is probably the most um, important thing you will ever learn about other brokers. Well, it's not other brokers, it's brokers and other platforms, and I dive into this in the next part of the video series. Bad order entry screens. You've seen enough of my trades. For those of you who follow me on my on the everyday trading that I do on here, and throughout every single time that I create orders, you will see this screen. Okay, you will never ever see an order screen like this anywhere on any platform, probably in the next 2 to 5 years. Why? Because the brokers would lose money if they gave it to you. Here is why. Okay. Well, intentionally bad money management. What does that mean? We talked about the rule of 72, lessons 1 and 2 and 3. We always talk about the capital, watching your capital, the 72 multiplier, the rule of 72. You want to see what is your net gain, your cost, your net profit, net loss, expected gain, all these stats in real time. You should have those at your fingertips when you create this trade. So for example, if I want to create this trade at 50,000 units, I know my 72 multiplier. I know what it is. Okay, that is so important to know. If you show me another platform that has this, I will take my hat off to them, and I could pretty much close out this platform because traders will probably use that one. But I don't think you would see one for the next few years. Okay, this is really important. You got to have this information when you trade. Otherwise, you're creating. We talked about this earlier on in the other video. Okay, if you were in the other video in lesson number 3, have a look at trading 103. We talk about this issue right here. So one of the things that we learn is that you got to have a stop loss no matter what. And most platforms, it's optional. Okay, placing a stop loss is optional. That's bad money management. We talk about 2-to-1 TPSL, take profit stop loss ratios. Look at Trading 102 video. Okay, you should never ever create an order without a stop loss. This platform will never allow you to create an order without a stop loss. Why? It's bad money management. Let me rephrase that. It's suicide. Okay? It's financial suicide not to put a stop loss. It means that you know absolutely nothing about trading. Okay, on some broker platform, the stop can only be after the trade is open. Now that's pretty stupid. Okay, they won't even show you the option. So for example, here the stop loss is for you. It's already created for you. Some of them won't even have the stop loss option. On here you actually have your take profit stop loss ratios. Everything is done for you. Talks to you about your spread. It talks to you about your effective stop and your effective ratio. All these things are really important. Okay, you need to know that for good money management. The other thing is missing essential functionality. Okay, no information about the portfolio impact, which we talked about. No multiple exits. Okay, we talked about this in lesson 103 when we talked about multi exits. You want to capture some of the profits and then keep the other trades possibly open longer. Okay, no preset for TPSL ratios. Okay, I misspelled that one. Okay, and you need to do the math on your own. Now, why? Because the more mistakes you make, the more money the brokers will make. Okay. And there's no consideration for spreads, like we talked about the effective stop loss and so on and so forth. Okay. And they just won't put that there because that's how they make their money. Okay. So to wrap things up, I'd like to talk about what's in the next upcoming videos. Probably this is I'm sure this video was very enlightening and very eye-opening for you. But the next one is going to be this whole series. The next 4 videos are really powerful. I'll be talking about platforms that guarantee your losses. Okay, and I'll show you the differences between the Trader's Hideout platform and other platforms. There's reasons why I created this platform. I said this in the beginning of the video. I was sick and tired of the games that brokers played, and part of the brokers are the platform. Just because you get a platform for free, it doesn't mean, there's all these software that you can download. It doesn't mean that the brokers don't have a plugin. They all do. Go to any broker and see we got MetaTrader plugin. Well, guess what? MetaTrader is a great program. I'm not knocking it out. I'm knocking out the plugin, because the plugin is the brain that tells that software how to operate. Okay, and all the games are at the broker level. So MetaTrader, again, I'm not knocking it off. It's a great program. Okay, but you could have all your technical analysis in there. You could do all the setups that you want. I'm not here to promote MT or anything, yeah, but just so you understand that you really don't have control, although it looks like it. You downloaded the software. That's great. Yeah, you downloaded the software, but if you want to use this one broker, it's going to act in one way, and use another broker will act differently. Well, why is that? Because it's the plugins, and it's all these things that we talked about until now that are in that plugin or are connected. The plugin is connected to that broker and their rules and their features. Okay, so the next part is going to be very interesting, and obviously, since I created my own platform, I have a fair bit of knowledge of what goes into a platform. The following part, I'll take you through the things that people as I meet traders all over the world, I find that people just don't learn. Okay, just don't learn from mistakes, and they keep on doing the same thing the wrong things over and over and over again, and why they lose money 80% or more of the time. Then I'll talk about the wrong tools for actual trading. Okay, and I said I'll give you an example, so I'll give this example right now. For example, I don't know if you know. Let's bring this up. Okay, I will do a special video just on this. I might even do that today. We'll see. But let's bring up the chart for the euro dollar. Okay, and we're going to take something that is very common for people to look for. Okay, and I'll talk to you about the mindset. Now, like I said before, I've been trading since 1988, so I know how the stock market works, and I know how Forex works. So here's the problem. Okay, we got this chart here. I'll bring up 100, a sample of 100. Now, this is a 15-minute chart, And what I want to talk to you about is pivot points. Now, for those who don't know what pivot points are, and for those who do, this will this is probably going to be very enlightening for you. The whole idea of pivot points came from the stock market, where the floor traders had these checkpoints to find whether things are either going to go down lower or going to go higher. So they set up these pivot points, they set up these checkpoints for the day. So anything under 30 minutes, so if we're using 5 minute, 10 minutes, 15 minutes, 20-minute charts, all the pivot points are based on the on previous days data, okay, the high low close, HLC. Now the problem with that is that, well, if I'm short trading, if I'm doing scalping, or I'm doing an intraday, say I'm doing a trade now for the next half an hour. Let's take a look right now, okay? I got this thing right here. I might want to do right now on a 15-minute chart. I want to look at the next 1 hour probably, and hopefully gain about I don't know, 15 pips or whatever. Now the problem is when I turn on, now on this platform it's different, okay? The way that the sample works here, notice we got this S1 here, okay, and there's the S1 and S2, okay, R1 and R2, okay. They're actually based on a sample of this type of chart, okay. Why? Because you should not be using something that is from yesterday. The reason why it was done that way for stocks is because every day is reset, right? They close the markets in the afternoon, they go to sleep, they come back in the morning, so they need some checkpoint to know what is expected for that day. Well, Forex is completely fluid, okay? It's continuous, 24/5. There is no breaks. So, and I'll take this one step further. If you do the 1 hour chart, okay, if you do normal pivot points, they're based on 1 week. So for example, if you were to check right now pivot points for the euro dollar, and pretty much all the platforms, the common mistake is to show you, well, right now it would show you everything for last week. Okay, now the close would be right because it's still in the sample, but the low may not be right. For example, how do we know this? If we take a look at the sample here, okay, the low would be around this area, okay, and if it was 1 week, chances are it's going to be around this area. So chances are the S2 is going to be around this. Now that's a problem because if I'm trading 1 hour time frames, I don't need 1 week of data. Okay, it's completely wrong. That's like 100. A sample is 100. It's completely inconsistent. I do suggest you take a look at the video I'll be making. I will probably make it right after this. Okay, so that's just a sample of the kind of things that the technical analysis, which is wrong information, or it's inconsistent, or it's bad information for you. Okay, so I hope you enjoyed this this video, and I'd love to see your comments. Thumbs up is good, and we'll see you in the next part. This is Mike Meller for Traders Hideout. May the profits be with you. Have a great one.